So this is the example which I gave you to look at, and then thereafter you do activity 1.79. So you were told that the following balances were taken from the accounting records of AB stores on the 20th February 2011, end of the financial year. So they gave you the balance on your debtors control as well as the balance at the end of the year for your bad debt account. Remember, our bad debt is amount that was not recovered, right? The debt that was not recovered, right? So you have two adjustments, right? So you are told to write off 600 as bad, okay, and then create a provision for bad debts of 5%. So since you are creating this for the first time, it means it's going to be an expense, right? Because you are creating this for the first time, meaning money will be allocated to this account, provision for bad debt, to say in the future if we have bad debts, right, we are going to have this money in the business, as saying even though they didn't pay, we have made an allowance for that, more like an insurance. Okay, so now let's record this adjustment, right? So for you to record them, remember that you must do your accounting equation, right? And then you must have your ledger account as well as your note number 5, trade and other receivables, right? So okay, so let's record the first one. It says write off bad debt, write off a further 600 as bad, right? So this 600 as bad, you already know that this is a debt and it has gone bad. So the reason I've told you, maybe we cannot reach that person. We've called them a number of times and they are not answering our calls, or we cannot in any way be able to reach them. Okay, or they might have died, or maybe they have lost their job. So we have to write this 600 off to bad debts, right? So this is a debt that needs to be taken to bad debts, right? So what do we do? For your accounting equation, right, that's the first thing we are doing. You need to identify the two accounts that are affected, right? So the first account, since we are dealing with a debt, is debtors control, right? And we know that debtors control, it is an asset, right? And now that we are decreasing it, right, we are actually removing this 600 from debtors control. It means debtors control will be credited because an asset decreases on the credit side. Another account which is affected, it is bad debt. Remember that bad debt, it is an expense, right? So we know that expenses increase on the debit side. So since you have identified the two accounts, you write them down. Your first one is what? Your first one is debtors control, and we have said since debtors control is decreasing because we are removing this person from our records to bad debts, it will be created. So you'll have your debtors control, right? And then you will have your bad debt. Your bad debt, it is an expense increase on the debit side, right? So what is the amount there? You were told that the amount there is actually 600, right? So you write 600 on the amount and say, okay, for my assets, okay, did I have an account which was affected as an asset? Yes, I had a debtors control. So it's minus for your asset, right? And then did I have any account for owner's equity? Yes, I had a bad debt. Bad debt, it is an expense and it actually decreases, and then we don't have any liability account, right? So the second one, it says you should create a provision for bad debt, right? So provision for bad debts of 5%. Okay, so you need to ask yourself which two accounts are affected. Two accounts that are affected at all times when you have to create a provision, or if you have to increase the provision or decrease it, is your provision for bad debts adjustment, which I told you it can either be an expense or income, or and your provision for bad debts, which is a negative asset. Remember, two accounts, provision for bad debts adjustment, which can either be an income or an expense, and provision for bad debts adjustment, which is not adjustment, provision for bad debts plain, which is your negative asset. right? So let's get to the calculation. So for you to be able to calculate your provision for bad debts, you need to have what? You need to have your debtors control, your debtors control, because you are told that you should create a provision for bad debts of 5% of your debtors control, book debts of your debtors control. So you need to have your debtors control amount, which is how much? Which is 5,600. So your 5,600, right? So this 5,600, remember that you had to actually remove 600 from it to make it 5,000. Remember, this had gone bad and you were told to actually remove it from your debtors. And now from this 5,000, that's where you calculate your provision for bad debts of what? Of 5%. You say 5,000 times 5%, times 5%, which will give you 250. So it's 250. Okay, so I told you that when you are creating a provision, or when you are increasing or decreasing it, two accounts affected. You have your provision for bad debts adjustment, which can either be an expense or an income, and you have your provision for bad debts, which is a negative asset, right? So this 250, right, it will go to those two accounts, right? So since we are creating one, we are going to take this 250 and put it to that account. We are going to have a provision for bad debt adjustment, and we know that expenses are always debited. So therefore, you would have your provision for bad debt adjustment, because it is an expense and expenses are debited, right? Because we are going to take this 250, 5% of our book debt, right, and allocate this amount to this account, making it a debit, right? And then therefore, if one account is debited, the other will be credited, which is provision for bad debt, which is a negative asset. So if it is a negative asset, we know that an asset is negative on the credit side. So therefore here it will be your provision for bad debt, right? And then it will be your 250. And then do we have an asset? Yes, we have a negative asset, which we call provision for bad debt. So therefore, it's a minus. Do we have an owner's equity? Yes, we have a provision for bad debt adjustment, which is an expense. And we know expenses, they increase. And when they increase on the debit side, we actually show a minus. Why? Because they are actually decreasing the profit, right? And then you do your account. So this is actually easy peasy. We know the balance sheet section records your assets, liability, capital, and drawings account, right? So now let's record this, right? I'll do that in the next video.